Hello, everyone, and thank you for joining another Lead Squared webinar. I'm Vaishnavi Shetty, and I'm from the marketing department of Lead Squared. Today's topic of discussion is Digital Onboarding 2.0, balancing security with speed in a digital world. In the face of evolving regulations related to KYC and AML and growing privacy concerns, achieving a secure but streamlined digital onboarding experience is critical. Today, our experts will explore innovative solutions to tackle challenges around regulations, mitigate sophisticated fraud, while ensuring a smooth onboarding experience. Today, we have with us Abhishek Sharma, who is the head of partnerships and alliances at Perfios. He has over a decade of experience in lending space, and he brings his deep understanding of the industry to help clients improve their customer onboarding process. Abhishek, thank you so much for joining us today.
Thank you
And
for
we
having me with you, Vaishnavi. So much.
Yeah. And we also have with us Vineet Sharma, who is the Director of Business Development here at Lead Squared. He brings over a decade of experience in helping companies across industries navigate digital transformation and implement successful solution selling strategies. They'll discuss ways to implement security measures without complementing the onboarding process. Now, before we begin, I would like to bring your attention to the bottom right of your screen. We have a chat tab there and a questions tab there. We would love to hear your thoughts and questions, so do not hesitate to put them there as we'll take them up at the end of the session. So, without further ado, let's begin. Abhishek and Vineet, over to you.
Thanks, Vaishnavi, and glad to be here. Hi, Abhishek.
Hi, Vineet.
I think this,
I'm really excited. I think
yeah,
this is going to be
I
fun.
think I think this is one webinar, and the topic itself is so interesting that I'm sure the audience will also have a lot of questions. In fact, even before beginning this webinar, we had a couple of questions coming in from the landing pages, and I think without wasting any more minute, I will start with the first question, and I think what could be the more relevant question when we are talking about the onboarding other than KYC. So I think Abhishek, you come from Perfios and one of the pioneers in the whole digital onboarding automation. While I think, and I'm assuming a lot of the audience in this webinar are from lending landscape. The whole KYC process, if you look at the trends in the industry, the automations, a lot of APIs also coming in. There is a certain maturity that the whole KYC process has hit, but still, there is with advancement of technology, there is always room for improvement. Would you like to share your perspective with our audience that what are the most recent and forthcoming trends in the space of KYC? Maybe you can take example of some mature markets if you want to, but what could be something new, maybe in terms of artificial intelligence and automation? Your view in that, and also towards the end, if you could enlighten all of us that in the parallel world, what is new happening in the KYC space, which is the way of automation. I think over to you, your perspective on these things.
Thanks, Vineet. And firstly, a very good afternoon to everyone who has joined. Thank you for taking the time out to be with us on this discussion. See, my perspective on what is changing in KYC is slightly different. It's not as much as pushed through by the regulations, but in terms of the nature of the business itself. In the in 2017-18, when the first round of digitization started in the BFSI predominantly, the whole objective was to acquire the customer quickly. As the regulations mature around it, and we realize that once we acquire the customer, we still need to get return on the investment that we have spent in acquiring the customer. So profiling became more important. And now with the digital data privacy bill, the profiling of the customer while onboarding with the necessary consent has become the key. So it's not as much as has changed in the KYC regulations, but in terms of how businesses are looking at the onboarding itself. So onboarding is not just about tick box exercise anymore, but it is also important as to profile the customer. That should I be rolling out a red colored carpet for him? Should I be rolling out a green or a yellow? Or is this a customer that I do not want into my ecosystem? So I think profiling for both as in terms of upsell and cross-sell opportunities, plus profiling in terms of fraud, that has become very important recently. And the last couple of months, my conversations with clients have been revolving around like finding money mules. How do we make sure that the account is right? How do we make sure that we're onboarding the right kind of customers? I think that is the bigger trend that I've seen in last year or so evolving in terms of knowing the customer to the maximum possible limit at the first instance itself, at the go itself. Because customer loyalty these days is very fickle. We are deal hunters today. We do not value the services being provided to us. We just want to find out where is the next best thing available in deal. And probably digital onboarding is partly to blame because you're as a customer, your effort in getting yourself onboarded into a new platform is very, very low now. Gone are the days when you have to walk into a branch. I could even open up a SBI account sitting here, something that we wouldn't have imagined possible about 5 years or 10 years ago. I think that lower cost of customer getting onboarded, combined with the fact that everybody is now looking at the ROIs on customer acquisition a lot more, we want to get it right the first time itself. I think that's a bigger trend that we see changing. It's no longer just about making sure that the identity and address and contactability is established, but also who am I onboarding? Is Abhishek Sharma a student? Is Abhishek Sharma a professional? Is he salaried? If he's salaried, to what level is he salaried? Can I get insights about that so that I can pitch him the right kind of personal loan if need be? You and I both probably are not the audience for a 25,000 rupees payday loan, but knowing us helps, and then it also gives a sense of loyalty into on the platform that you're being onboarded. The platform understands you, brings about the familiarity. That's a change. KYC continues to be simpler in terms of, for me to be able to identify you as Vineet Sharma, it's much easier. For me to identify you as Vineet Sharma as an authorized signatory of Lead Square still has certain hoops to go through because while RBI has made a lot of clarity about what are necessary documents for KYP, but at the end of the day, there's a letter of the law and there's a spirit of the law. The compliance and business teams need to work hand in hand because more often than not, I've seen conflicts and the compliance and business teams say that business says that this should be okay, and compliance says no, that's not okay. And you can build an entire strategy in terms of deciding the top of the funnel for onboarding of the customers, but the compliance says no. Your funnel really gets very narrow, and then you do not have sufficient ROI to take up that initiative. So might as well involve the compliance at the top of the funnel itself. That look, these are the kind of customers who will come onto our platform. These are the kind of customers that you want to target. What should the journey be like? Do I need an electricity bill? Do I need an FSA license? Do I need an FDA license? What to do with Udyam? If they don't have an Udyam, what are the other options do I have? I think if you build all that in the journey itself, your success rates in terms of having done the hard work and getting a customer through the door will be much easier for you to fulfill him down the funnel. I think that's where I personally, and this is purely on the basis of my experience, we miss a trick. We kind of treat compliance as somebody who just need to be kept happy in some way or the other, but not really involving them in the more most critical part. That at the end of the day, it's a joint effort. I think KYB continues to evolve. In fact, if you look at the latest master circulars, RBI gives a lot of flexibility in onboarding KYB. Even if multiple documents are not available, if the compliance is satisfied, if the institution is satisfied that the person cannot provide more than one document or two documents, it is sufficient. You don't need multiple documents to verify the business. But at the end of the day, that's the flexibility in the master circular. Does the flexibility translates into your policy? Does the flexibility translates into your business? That is something that the organizations need to decide.
So I think very interesting take, Abhishek, reading down the points that you mentioned, especially what kind of carpet you want to throw to the customer. Our business is the red carpet or yellow or a green. But at the same time, I think all the customers, because I'm on the other side of the table where we deal with the customers on the lending side or in banking who are looking at the lifetime value of the customers. Of course, you onboard them, you cross sell and upsell. And with help of CRM, banks are already enabled to do that. Now, from a know your customer, which is a regulatory requirement, I think the businesses would want to understand their customers and to be able to pitch them well. Like you said, that when I'm onboarding a 1 year experienced business professional, maybe I'll offer him a ticket size of 50 lakhs as a personal loan, but that amount would be multiplied by 10 for somebody in their late 30s. Now, with that, do you think a correlation or a cut of understand your customer coming in the first process, which is KYC? So, what point I'm trying to drive here is, do you see a possibility that the banks or lending companies start using KYC process to even segment their customers uh, at the time of onboarding them itself?
I Thanks, Vinith, for bringing that up. Yes, I think there are ways and means that you can do it. See, we get a lot of data even while we're onboarding the customer. Say, for example, can I get the PAN card issued date when I'm verifying a PAN? I'm just using that as an example.
Yeah.
If I do, then I have a very good understanding on the vintage of the PAN itself. Right? More of If I am validating somebody's GST, I can also get to know the GST's vintage itself, right? The date on which the GST was registered. That Yes, I understand that for organizations that have been existing before 2017, everybody would have the 1st July 2017 as an onboarding date because that's when GST came into being. But somebody was registered on 2019, 2021, 22. That's an insight that is coming in terms of how dated the business is. Right? So a lot of even see in terms of vintage, in terms of turnover, if I know, for example, Abhishek works for Infosys and the average salary at Infosys is 40,000 rupees, for example, then it gives you a lot of insights about that this is the average and this guy has a work experience of 10 to 12 years behind him. He might be above the average by a decent multiple, right? So those are heuristics that are available for you. It's just that whether or not you can take actions on them is going to be a function of, again, I'm coming back to policy, compliance, and business. So it's in terms of our ability to profile the customer at the time of onboarding is substantially higher now than it was about 5 years back. Are we making the most of it is a question that we need to look back and say, okay, are we doing enough? And yes, you're right. If the right product sold to the right customer at the right time is where the magic happens, right? It creates loyalty, it creates brand and product platform affinity. Otherwise, getting a loan, I'll share personal experience. I have a salary account with a bank, and the bank's customer care keeps calling me for a 3 lakh rupees personal loan, and I keep telling them that please look at your internal data. I have a balance in my savings account. I don't need the PL. It just creates that bit of bad taste in your mouth that you've been banking with me for 13 years. You should be knowing that well enough that I don't need a PL. I think these are just some of the ways in which we can segment and optimize, right? That individual who's on bank's payroll making the phone calls, it's a waste of the time. Why call a customer who's not going to be converting? It is time and resource, both wastage. I think that optimization needs to happen by when we look at our own internal data as well as the insights that we get while we're onboarding. I hope that answers the question.
Absolutely valid. I think some of the problem statements that is a brand promise of Lead Squad as well. But I think it makes sense. I wanted to take a view or your perspective on this point. Thanks for answering that, Abhishek. I would also like to move to the next question where I kind of request your perspective on the regulatory requirements, especially in terms of the anti-money laundering or data privacy. What kind of changes do you see coming in the onboarding process of the customers, which will comply to these regulations? Although you explained it, but if you can double click on it.
Sure. So I'll touch upon AML and data privacy
Sure.
separately. AML being a regulatory requirement and data privacy now being a matter of law. Uh, the the challenge with AML is that there's no unique identifier in AML searches. So if unfortunately you have been named as Dawood Ibrahim, you will always have trouble getting yourself onboarded into the BFSI ecosystem. You will be pretty much on every list out there. There is substantial amount of effort that is going in terms of sanitizing the data, making sure that it is traced back to a unique identifier or something that you can put in place, which makes it easier for people who are just happen to share the name of a infamous individual being able to onboard themselves. I think not just AML, the sister concern of AML, so to say, if I can use that phrasing, is the politically exposed person.
Yeah.
Where does the PEP, where does PEP's gamut start and where does it end? Do you only need to check elected members or even the immediate families of the elected members of the legislative houses? Do they qualify as PEP? So, for example, somebody who used to be chairman of a PSU will qualify as a PEP. Now that chairman comes on, sits on the board of this company, and suddenly you will have an alert which says, "Hey, there's a politically exposed person on the board." I think PEP needs a bit of sanitization as well in terms of both our definitions as our ability to trace them, and same goes for AML. Now comes to the draft, the data privacy part. So the cornerstone of data privacy is the consent, and what the latest bill harps on is on the informed consent, right?
Yeah.
That you are aware of what you are providing a consent for, and for what is the end use of the data that you're providing. So you need to that you're at any point in time aware that I'm sharing XYZ, and this is for alpha, beta, and gamma purpose, and that is the validity of this information. That the organization will use this information for this so much, such and such period, or if at any point of time I withdraw my consent, then they will no longer further be using the same. uh, so that's the data privacy side. I'll just take, I think somebody mentioned that the volume's low. Can somebody confirm that I am audible better now?
At least I can confirm I'm able to hear you well. Uh,
Okay.
yeah,
uh,
people, I mean, audience, you can post it in the chat box if you're facing the same difficulty, and we'll read it. Punika has commented that the volume is low. If anybody else can confirm,
okay, great. Yeah, so okay, cool. So I think speaking louder has helped, but
yeah,
the the on the data privacy side, right, the consent plays a very, very important role. I think that's where, while the consent was earlier hidden on the last page of terms and conditions, right, uh, now it's coming out on the open that, look, this is how we are using data, and this is what we are going to do with your data. That's the core. I think there's a relevant question here: is there a consent required for analyzing data of customer, even if the customer has discontinued business and loan arrangement? Yes, yes. That's if you read the draft data privacy bill, if the customer withdraws his consent, and if the withdrawal of consent is part of his termination of his loan arrangement with you, you can no longer process the information. That's for example, if I terminate my savings account with the bank can no longer call me for offering their services, particularly if it's for savings account. That's the beauty of what we are trying to do with the bill. Till there's an architecture around consent manager, that the consent will be centrally managed. That's a In theory, it's a beautiful architecture. We still need to see how the implementation happens, but at least it is step in the right direction. And if you look at what is happening in the developed markets, particularly the data privacy bill takes a lot from what has happened in the European Union regarding data privacy. The guardrails that we have put in place are also very robust. As I said, there's still some way in which the implementation is pending. So once we see the full implementation of it, I think that's when we will be have much more clarity. Is the withdrawal of consent implicit with the loan agreement? It depends. If you're drafting a loan agreement in a manner in which the withdrawal of consent is part of the agreement ending, it would be the consent will no longer be valid. But again, it depends upon what kind of agreement that you get into with the customer. If the customer has to necessarily take another explicit action to withdraw the consent for his data processing, then irrespective of the loan validity, the consent should hold.
I think it will be interesting to see that in our world where data is given out or outsourced to call centers, the data is leaked forever, right? And when it goes out of one system, how much bothersome one could be about keeping that consent in place. But I think interesting question, and thanks for enlightening all of us and audience. Thank you so much for participating right from the beginning. Takes me to the next point or question to you, Abhishek. Your view on fraud detection, I think, in the entire onboarding, whether it is KYC or KYB, very, very important. But nowadays, even the fraudsters are using technologies. You and I are not the only ones with the on the technology. So, what do you see? How difficult it is to get with the technological advancements nowadays? From a fraud, people are talking about sophisticated frauds. What's your overall take? What could be the right mechanism to counter it?
I think I can talk about fraud till tomorrow morning. The space that is the kind of interesting frauds that we have seen, and very sophisticated ones as well. So let me just start by saying that perhaps the most unpopular statement that you cannot prevent 100% of frauds. You cannot. See, think about this. Somebody's full-time job is to commit fraud, right? And we are dedicating 25% or 30% of our bandwidth in eliminating that fraud. You're fighting with really creative people in India, and I come from Jharkhand. I jokingly say that we are famous for two things: Jamtara and Dhoni, right? So, uh, given that, it's difficult, but not all fraud detection requires tech. And I'll give you a very simple example, and it's anecdotal, so it's a real case scenario. Abhishek Sharma is a very common name, right? Till very recently, NSDL changed its API. You could actually just ping and get the name of the PAN. And what is the PAN number? It's a string of 10 characters. First 5 characters, 4 digits, and then one last another alphabet. I know, Vineet, that the fourth and fifth digits in your PAN card are PNS. So that means I don't need to guess the other. I only need to guess the other 8, right? There's no rocket science. The S is because of the first name of your surname, first alphabet of your surname, and P is for because it's an individual PAN. So you and I both share the PS
Yeah.
in our PAN.
So it remains only 8 characters to crack.
Only 8 characters to be cracked, and out of which 4 are numbers. They can only take the value from 0 to 9. That means it's 10 to the power 4.
Yeah.
So probabilistically, you can generate the entire, all possible combinations of PAN numbers in this country. And you can keep hitting NSGL and verifying with what is the name against the PAN, right? Now you got another Abhishek Sharma whose PAN number you got, right? So somebody got my PAN. And this is such a common name that I can assure you that I'm not going to be the first Abhishek Sharma in your phone book. So you get the other Abhishek Sharma whose Aadhaar is there. Now you ask him to take a loan. He will verify, his Aadhaar will be verified, his face match would happen, his date of birth will be validated. All you're doing is you're checking bureau for a different Abhishek Sharma. Now that fraud only requires one simple check. Check whether the Aadhaar and PAN are linked with each other or not. It doesn't require an AI. It doesn't require a generative AI either. Right? There's no tech needed. One simple API service call. And these frauds have happened. That the case that I'm talking about had 8 different loans from different lenders, secured and unsecured both. So you're talking about also the complicity of the people who are doing the secured lending, because the secured lending is a two-wheeler finance, right? So there is a hypothecation done and there's a physical layer as well. So the challenge is that we have to look at what kinds of frauds are we seeing, and where is the bulk of the fraudsters lie. If you're looking at identity as a primary source of fraud, then you don't need to focus on identity. But if you're looking at fraud which are sophisticated, where the identity is tampered, there are mechanisms in tech that you can help to identify whether the PAN has been tampered or Aadhaar has been tampered or not. Implementing that, depending upon the ticket size that we're getting exposed to, right? We have to do a cost benefit analysis of adding another layer of tech in our onboarding journey, another layer of potentially friction in our onboarding journey, to see whether it is giving us the right kind of results or not. Sadly enough, the business will always resist another layer of friction. It will resist another OTP, that the drop-offs will happen. But at the end of the day, we need to look at, are we allowing the right set of people to pass through our filters? So the filters need to keep on evolving. The second biggest concern that I'm having of late is the money mule conversations. Is this Abhishek Sharma? Is this mobile number genuine? Is this mobile number belongs to Abhishek Sharma? I have a driver for if I have to do a fraud, I can open an account in the driver's name, just make sure that all transactions OTP are coming to my mobile number. I think RBI has tried to plug that particular hole, where in the last KYC circular, they did came about saying that the OTPs can only go to the mobile number registered with the Aadhaar that is linked with the account. Yes, but you can, the Aadhaar linkage can also go back further. So there is a lot that even the Ministry of Telecom is doing in this space in terms of how do we identify fraudsters' mobile number. We are having some certain conversations. But there are checks that you can do. For example, if I'm a fraudster, I will have a minimal digital footprint. My mobile number will not link to any UPI. It won't have an e-commerce footprint presence. It won't have a presence with any of the Sony Lives and Amazon Prime Videos or Netflix of the world. So depending if your target audience is Gen Z of tier 1, tier 2 cities, you can actually put in those kind of checks. Check if he has a Sony Live account. Check if he has got an Amazon Prime account. But these are the checks that will fail if you're going to rural India and giving onboarding customers for microfinance, right? So your rules and regulations that you look at, your policies that you need to look at, need to be also be cognizant of which is the customer that you're onboarding. You cannot. There's no one size fit all solution that is unfortunately possible. So depending upon the audience, depending upon their sophistication, depending upon their digital expertise, is what you need to evolve your own internal policies and checks in place.
So
I think that
if I summarize this conversation, you're saying that maybe you would not need technology may not be answer to all the problems, even if the problem is arising with advancement of technology. And to a certain extent, you're also meaning to say it will take common sense to prevent some type of frauds, and some type of frauds will always happen. So there is going to be a learning curve. Do you think
absolutely.
do you think at some point in time, because you named Jamtara, I'm sure many of the audience would have seen the series. Do you think sometimes the lenders will have to start thinking like a fraudster to be able to preempt what can happen next? This is going very Hollywood style, but what's your take on this? Very hypothetical, but still, I would like that.
We do. We spend considerable amount of time in thinking about when the particular players come into being. How can you use this to defraud? Interestingly, the company that Perfios acquired, Karza Technologies, the founders for those companies were fraud investigators for Ernst & Young. So the genesis has always been there in terms of identifying how can you misuse this possible data and how can you prevent the misuse of this particular. Take something, for example, UPI, right? There is nothing that stops me from creating a handle called Vineet Sharma at UPI.
Yeah.
Because UPI allows you to create anything like a generic email ID. So you can exist as James Bond 007. Somebody has created a UPI handle called PM Modi at UPI and has no business of owning that handle. So when you're using a platform, right, and to expect, and I think that you cannot monitor each transaction, right? You have to be careful about what you're looking at. Any big ticket transaction, anytime you're seeing the UPI for the first time, just verify it. It doesn't take that much of an effort. It doesn't take that much of a cost either. I'm saying, and you're right. Not all frauds can be solved at all, and solving for a lot of frauds don't even need very sophisticated tech. Just a change of policy, just in the change of service calls that we're making during the journey itself.
I think very interesting. Although we've spent some good amount of time on this question, but one last take. Many times we debate on transaction-based fraud detection versus an identity-based fraud detection, and we all know in the world where people change their SIM cards so frequently, and fraudsters they don't want to keep any identity track. What is your perspective? Is it going to be a mix of both that should be taken care, or it is going to be transaction based for some time?
See, it's a mix of both, at least at the bank's end. Banks were for sure, when they look at abnormal transaction behavior on a particular account, they do put a check in place. But it is very expensive to do transaction monitoring. Very expensive. Say, for example, most of us don't pay a single penny for an IMPS to go through. UPI is free for us, right? Bank has to expose its infra and technology. So every transaction is a cost to the bank while they're not accruing any revenue out of it, right? So it is very expensive, and they have to do a random sampling or heuristics based analytics in terms of what they should suspend temporarily. And that is why you would see all banks and financial institutions have a check for 24 hours for you to do a high value transaction after you've immediately added a payee. That's one way of them reducing their cost by putting a time block there, right? That you have 24 hours to reconsider this decision to transfer 10 lakh rupees from an account that you've just added. So the majority will continue to be at the identity level, while we will see as tech costs come down, as we get better in learning customer behavior and to identify what is an abnormal behavior. I think transactions monitoring will also play a dominant role going forward. But as of now, it's more rule based than actually by learning by using AI. I think that's the future.
Very rightly said. Great to listen your perspective on the entire fraud detection gamut, and takes me to the next question. I think, like I began the first question by stating that if I talk about the whole KYC or eKYC, I think using technology, the lenders, I think India is already a pioneer in terms of innovation in the digital lending space. But apart from the current trends and automation which is already there in place, what are the new trends? Could you share? Would you like to share your perspective about central KYC or using DigiLocker, where one KYC can be leveraged by any other lender? And at the same time, do you see a possible innovation where we absolutely pivot on something else other than the current set of processes? Your perspective on that.
See, CKYC is evolving in terms of the quality of data that you get from CKYC, the biggest trend that I see is, and also a concern that one fine day the government says DigiLocker and CKYC are the only modes to do digital KYCs, and just puts a lot of us out of business. Uh, but but keeping that aside, CKYC is evolving, and the quality of data that you get back from CKYC is also improved substantially in last 18 months or so. DigiLocker continues with its own adoption, although the adoption is higher on tier 1 cities than tier 2, tier 3. Tier 3, the adoption is really, really poor, but it'll only change. It'll only change with better penetration of mobile number itself, because the primary key for DigiLocker continues to be combination of Aadhaar and mobile number. But you and I represent a very different segment of population, where if we have 4 people in our household and 4 people have 4 Aadhars and 4 mobile numbers linked with that. Go to tier 3, where there's a household has 2 mobile numbers, a household of 6 has 2 mobile numbers. Then in those cases, even though DigiLocker is available, the DigiLocker journeys are going to be very, very ineffective. So it's not, while the trend change will happen, you'll have to be cognizant of the kind of customer onboarding, and whether, so even though something is trendy, it may not be for your business. Even if CKYC is trendy or DigiLocker is trendy, it may not work for microfinance institutions. So those are some certain things that I just want to highlight to the audience. Secondly, the digital fraud, the digital identity piece. How much can you know by knowing just the mobile number? Because that is predominantly the first unique identifier that we are interacting with, even before we ask for a customer's PAN number or any identity document. Doing more with mobile is going to be the way forward. Can I trust the mobile number at the onset itself, or is there a fraud repository that I can check whether this mobile number has been reported fraud? I think that's going to be the new trend that we'll see going forward.
Okay.
That's already.
There is a question from in the chat box from Manoj. I would like to draw your attention where Manoj asks, is there any API available to check mobile number associated with any of the subscription? I think it is an anecdote to the discussion where, like you said, that mobile number could be something that can be leveraged. And I think, if I'm not mistaken, Manoj is coming from a background that mobile number is linked to various services, creates a digital footprint of a customer. What's your take, Abhishek?
So there are solutions around that. A lot of players like us are trying to work in that field, that we are able to create insights about the mobile number itself. So yes, there are solutions available, Manoj. We'll be happy to have that conversation offline. But there's a mechanism in which you can trust the mobile number a lot more than just sending, triggering an OTP and verifying it.
I, so Abhishek, one question which is going to be a sub question in this, because you talked about maybe you and I represent a very different cohort in this country, as well as segmentation. Now the lenders are trying to sell all type of asset journeys in all cities, right? Tier one town, tier two towns, tier three towns. While today we are talking about agri banking and microfinance prevalent in tier four towns, but the truth is, even there is a certain market for low ticket unsecured personal loan. Now, for a bank, the personal loan journey or onboarding would be a process where there would be option at each stage or milestone. But behavior of a tier four town, like you yourself stated, is going to be very different from a tier one town. Now, being at Perfios, please enlighten us while you automate this part, or you help the lenders in getting the right data. How do you create a solution? And this has to be co-created along with the lender, that one journey can accommodate a tier one town customer having a stable mobile number linked with Aadhaar, while it also is able to cater to somebody who's living in a tier four town.
Uh, Glad that you asked that question. It was one of the questions that we answered for one of the largest NBFCs. The challenge that you have is that you cannot see onboarding you and me. We will have a passport, a driving license, a voter ID card, a PAN card, an Aadhaar, just about every identity document, right, that is needed. All of that can be digitally verified. How do you digitally verify a ration card? How do you digitally verify a Narega card? In RBI's parlance, they are acceptable documents for KYC.
Yeah.
So when you sit, how do you how can you digitally verify a school living certificate, right? So when you decide on that, you have to think about not a straight line that will take a customer from point A to point B. Think about it as a river that will keep on branching out depending upon what the immediately previous parameter was. And I think when we sit down and we decide or work with customers in helping them revamp their journeys, we look back at their data, that what percentage of their customer have provided this data set, what percentage of their customers have provided. You know your customers better than we do, right? You have a lot of insights. What percentage population do I already have PAN populated? What percentage is provided with voter ID card? What percentage is provided with driving license? And then you can then do segmentation analysis. Okay, tier 3 cities, the percentage of voter ID card goes higher. Once you know that insight, that okay, then you can decide on a journey that okay, this is the lat long coming from for me. Then this is the kind of journey that I want the customer to go through. So you don't have to design multiple screens. Just have to work on the fact that the question that I'm going to ask the customer is going to function of every stage. What is the kind of demographic insights that I'm getting from him, but the data set that he has provided. So it's not collect all the data and then analyze the customer. Keep analyzing the customer as he's walking through your funnel. And I think that's the super important thing. So the lat long of the app or the lat long of the journey suggests that it is coming from a hinterland in Rajasthan. Be prepared for asking the right set of questions. So you got the PAN number and you got a GST against it, then you know that it is self-employed and not a salary individual. Be prepared to ask the right question.
Yeah, yeah, makes sense. Makes sense. I'm reading through the chat box and many questions coming from the audience. I'll pick up one. Arul has asked, "Is there any warranty or coverage for digital fraud?" I think our conversation was more around onboarding a customer to in a lending ecosystem while lending, but still, I think this is coming from a end consumer perspective. That if there is a fraud that happens to me, is there a warranty or coverage for me? I don't think so, but any.
I vaguely remember hearing that people are providing insurances against that, but I'm not sure whether it has happened or whether been a large enough market for it. I remember when suddenly mobile phone insurance came into being, there was a whole conversation about pocket insurances for just something like an insurance for losing your wallet.
Yeah.
So there's a lot of conversations around that, but I'm not sure whether it has seen the light of the day.
Yeah. So I think Arul, my take on this question, and trying to create a parlance to the real world. If there is a fraud that happens in the real world, which is not a digital fraud, there is no insurance. Although there are frameworks, there is law and order that is put in place for these things not to happen, but there is no guarantee that it has to be an external insurance. I think whatever framework NPCI, SEBI, or RBI put in place, such kind of frauds may happen. I think awareness and education is the first
Yeah.
step. So I think I'll move to the next question. We've talked about many things here, Abhishek, and the regulatory landscape keeps ever evolving. We know that data privacy and data prevention is going to be the next thing whenever we go to the customers, and the audience from the other side are going to talk about it when we meet them. But any new anticipatory regulatory change, which is the top of the town, would you like to draw audience's focus on that point? Anything that you foresee coming very strongly, and also if we
I
need to take,
it's going to be
yeah,
very difficult to anticipate what RBI or SEBI or the regulators are going to do. But there's a push on DigiLocker. There's a push on using the central pipes for verification. At least the conversation that we've had from the customers, CKYC continues to be being given a bit of thrust.
okay,
So that's going to be the one key change.
okay.
Vinith, am I audible?
You're audible, but I'm losing your video. Maybe it's the maybe some connectivity issue at your end, but you're audible, adequately audible. Another question, Abhishek, are you able to hear us?
Yeah. So that in terms of the future, in terms of the data pipe, might be owned
Understood.
by the government itself. That is
Okay.
one thing that I also touched upon earlier. Is something that both keeps us awake at night and also keeps us on our toes.
Okay.
Other than that, the focus is shifting towards not just using KYC as an onboarding, but also as a profiling capability. I think that's the secondary part
Something that
that
we,
that I've already touched upon.
Abhishek, because you, I'm sure being in Perfios, you would also try to see the best trends in terms of fraud detection or efficiency, faster processes of lending. Is there anything that India can learn from Western market or mature markets? Coming from a perspective, we are pretty advanced in terms of
I think, am I audible to people? I think if somebody can give me a feedback on the chat, it'll be useful.
audience. Please let us know if you are able to hear Abhishek. At least I am able to hear him. Yes, I think
Okay,
Richa
great.
and
Then I'll
Avinash.
take the questions that have people have put in, and I
Of course,
believe
of
Abhinav
course.
Sharma has asked this question: how do you see Perfios creating impact in upcoming mega boost on digital lending and the cost? Now I'll touch upon. Thank you for bringing in cost here. If you read the digital the data privacy bill, it puts a substantial onus of a penalty in case there's a breach at the data processor's end. And it not just applies to data processor, but any third party that the data processor engages with, it applies to them as well. Now, in thankfully and fingers crossed, may that day never come. We haven't had a data breach ever, but if that happens, we will be substantially liable to pay a monetary penalty. What do we do to cover that? We invest in technology, and more importantly, we also buy insurance. Insurance is a coverage. Now, that coverage has a cost that has to be apportioned on the service that we provide. The tech infra that you need to build has a cost. So if it's very easy to look at just a transactional cost, but in a technology setup, you also need to look at costs that are not revenue accredited. For example, our investment in our security doesn't generate revenue for us. Our investment in insurance doesn't generate revenue for us. So it's very easy to think of it that the cloud costs are so low, the lambda cost is so low. Why is the service cost that high? Because there's a lot of fixed costs that's adding up to that. Now, that investment allows your availability. That investment allows reliability. And I, while I do understand where you're coming from in terms of the cost is much higher than the competition, at the end, if you look at the long-term value in terms of the service availability and the full rate, I think the scales are tilted in our favor, but it's a personal experience or the individual experience that. So I wouldn't comment further on that. In terms of the digital lending ecosystem, I think we are already a dominant player in that space, in not just in providing insights, but also about the analytical capabilities, particularly about fraud detections. I'll just share the stats with you. About 2% of the documents that we process are frauds, and we do that uh, on over 10 lakh records every data documents every single month. That gives us being better and getting better in understanding the fraud. I think size has an advantage here. I think we already play a good role here. There's another question about why should you work with a digital lending company and not invest in house risk assessment. You should always invest in house risk assessment, but you should always also count upon outside world for certain amount of frauds, because for one reason they for anybody, not just us, somebody like us process documents and data that flows through their pipes comes from way more sources. For example, if we look at the API calls, we do close to 13 crore API calls in a month. That is a huge volume. If you just to quote a statistics, we have already verified about half of the PAN cards that have been issued in this country. That reaching that scale, it gives an advantage to learn from somebody else's misery. If somebody else has seen a fraud, if any of that customer, we will try to fix that, and that solution will be available even if you as an individual may have not seen that fraud yet. So I think that's helpful. While it does not render the in-house risk assessment mechanism useless, it complements it.
Okay, I
The
think
scale of company,
the
I
first question is there
it,
any area
we
available?
have very small customers in terms of the ticket size as well as the headcount, and we have really large ones. So I think at the end of the day, it's about the margins that you have, whether or not you can absorb the cost of engaging a technology product like Perfios. Is it mandatory for investors onboarding on AI to be present in India while signing contribution agreements digitally? I believe it's a SEBI guideline. It's a SEBI regulated requirement that at least in RBI, the video KYC has to be done from the geographical boundaries of India itself. But I think it's a guideline thing, and I'm not very sure about the answer for that.
There was a question from Mansi
There's a
Abhishek.
new question which Sunil
API
has asked. Can you touch upon all the available alternate data sources that can verify user information? There's a lot actually. Say for example, and I'll just touch upon something that's readily available. It's an e-code database, right? When you're onboarding a KYB, a business entity, can you check if they have court cases against them? That gives you very good understanding about if there is a nature of a court case, that outcome of which can substantially impact the nature of the entity as a going concern. Would you be looking to give them a term 1 or 5 years? And that is available. You can both as a service as well as even individually. You can just go to the e-courts website and start searching in the district of their business if they have court cases against them. So there is a lot of alternate data. It depends upon what kind of lending are we going to do. Say for example, a PL for salaried class will have a very different kind of verification than a BL for a business. But depending upon the lending, there can be, and for example, I'll just spend a minute on a salaried PL. Can I check whether mobile number is linked with the Aadhaar? That's one verification. That's coming from an alternate data. Can I check whether the mobile number belongs to Abhishek Sharma or not? That's the secondary verification. Can I check if Abhishek says that he works for Perfios? Does he really work for Perfios? Can I verify that without actually having to call the HR or going and visiting his office personally, or without asking for salary slips? Those are verifications that are possible. Can I digitally get the ITR and assess the risk without asking for a PDF that could potentially be tampered? Can I reduce my risk that way? So it depends upon the journey, Sunil. It depends upon the product that you're offering and to the segment of customers that you're offering. But trust me, we tap onto close to 900 different sources of data. There is one for everyone.
There is a question from Ranjat. if you
Pranjal,
can.
sadly, the customer segment that I've mostly been dealing with has been banks and NBFCs and fintechs, and very little on to do with SEBI. But I'll park this question and check within my customer base if somebody has an answer to that, and I'll come back to you later if that is okay with you. But I do not have an answer to the question about how do you onboard NRI investors. As of now, I don't have the answer to that question.
Another question from
Do
Avinash.
you or our partners have a solution which gets going from day one? Again, Abhinav, I believe it be a function of what product are you looking to kickstart on. If it's a loan, there are multiple players who can offer a SaaS solution just for that. There are more questions on chat. Can we verify the foreign credit rating of a borrower while funding to an NRI borrower? No. As of now, we only most of the data sources that we tap into are Indian data sources. So the foreign credit ratings as of now are not available, not accessible.
What about NRI investors? Is one question.
Great. Are there questions that I haven't answered yet? Is there an API available which can notify the AIF fund wherever there is any change in KYC of any investor? I believe you can. I believe you can look at CKYC, the last update date, but I will. That's the only one where you can check if there has been any change.
One question from Richa Kamdar. From micro loan and agri loan lending perspective, what are the most important data validation services?
I think Richa, from micro loan, agri loan lending, I don't think I've received the full text in terms of what the question is.
So I think what Richa is wanting to understand what kind of documents. I think you answered that. That maybe for a tier 4 down where agri loan or micro loan are prevalent, maybe if
I
technology.
believe a lot of interesting things are happening in the agri loan space. I think there is a satellite data that is available. It's a very different segment than looking at salaried class or businesses. I think in terms of the quality of data and its availability, substantial improvement has happened of late. So again, depending on the whether it's a farm loan or whether it's a tractor loan, I think the use cases will differ, but there are substantial checks. Like for example, for Maharashtra, even the Satbara can be verified digitally. The ownership of the land itself can be verified. There are satellite analytic companies that will provide you the insights about what kind of agricultural yield that particular plot of land has had. I think a lot has happened, and lots continues to be evolved, particularly given the fact that the government's focus is on improving the quality of lending that is available to our farmers.
Yeah.
Do we provide credit information reports for individuals and corporates? If by credit information you mean the bureau reports, then we do not, because the bureaus are regulated entity and you have to directly engage with them. However, we do offer solutions in terms of your ability to evaluate the data that you receive from credit bureaus. Avinash made a comment saying CKYC is not having proper data. Yes, but of late in the last 8 to 10 months, we have seen the quality of data improving substantially. Again, that may not be your realized insights, but of late we are seeing a lot more happening on the CKYC side, both in terms of cleaning up the data itself.
So there was one more question, Abhishek, that had come from the landing page.
Lots of questions, and I think we are already coming towards the end of the scheduled time. Any more questions?
Abhishek, are you able to hear me? I'm not sure if I'm audible at your end, Abhishek.
We need to.
Vaishnavi, can you confirm if I'm audible there?
Yes, yes, we need your audible.
Okay, so I think we are towards the end. I would want to pose one more question on behalf of the audience. So, Abhishek,
Yes.
what do you see the shortest lending journey, uh, which comply with the regulatory aspect as well at a very high level? Abhishek, would you like to make a comment there?
I think
Uh,
I think
I
we've
think,
lost Vineet
not
again.
yet.
yes.
Yes.
Am I audible to you, Abhishek? I think I see some challenges at Abhishek's end in terms of connectivity. Good that you
Yeah.
are able to read all the
Abhishek,
questions and chat box and have majorly asked
Oh,
and mentioned all the questions. Abhishek, are you back with us?
वो आपको बुला रहे कॉल पे
yeah.
Yeah. Okay. All right, brings us to the end of this webinar.
yes.
Thank you, audience,
Thank.
for being so participative. I think Abhishek has
Yeah.
left. Actually,
I
it's
think he's
and
joining back, but thank you so much, Abhishek and Vineet, for sharing such valuable insights. And we are very happy to see such active participation from attendees. It was very well put together, and I'm sure everyone has a lot to take back today. And we'll definitely share an summary of insights and the recording for you to go over. Uh, Abhishek is not back yet, but thanks again, Vineet and
no.
Abhishek. If there are any more questions, you can put it in the chat box and we will get it to Abhishek and get the answers for you. To all those who have joined, thank you for taking out your time for the session. Please feel free to write to us if you have any questions or queries with regarding to our offerings or anything else. And you could also book a demo with us or with Perfios to get a more tailored view of how uh, we can help you with your customer onboarding process. And with that, we would like to conclude our sessions. Everyone, please take care and have a very nice day. We hope to see you at our next session.